In this video, I'll break down the Tesla trade that I took at the open. I'll also explain why small wins are starting to feel like losses. So let's start with the gap freeze. The gap freeze to me is when I have a gap down and I fail to enter at the right time. So this is where I missed my entry, where the gap is the first candle and I should have entered right when we took out the bottom of that candle. Instead, I waited until we came down to our significant area of support, which is 409. So we came to 409 and that's where I entered. So now we're in the play and we're continuing to the downside. Now we're having a pullback. Again, the purple line here is our stop loss zone. This is where we're going to cut the play or go the other way. But this is also a significant level because as long as we don't breach our stop loss, we are safe. All right, listen, I hope that made sense. As long as we don't breach our stop loss, the first purple line here at 413.72, the high of the day, we are safe. We're also under the 200 and the 21 period moving average, and we have just came back to the 8 period simple moving average, this blue line here. We are getting a rejection from that line, which means that line is now the resistance that we're going to monitor. And as long as we stay under the 8 period moving average, we are in good shape. All right, so this particular trade was a very good trade, all things considered. However, I realized that I freaked out of this position. And what do I mean when I say I freaked out of this position? Shout out to OV. I didn't exit the play based on profit taking rules. I exited the play based on me being fearful that I would lose some of the profits that I saw. This is why some people cover their P&L. All right, there's a number of reasons. So what are the profit taking rules when you are in this position? So the first one and the easiest one is the moving average big bar profit take. All right, so what is the power bar moving average? So for example, I would move my stop loss down from the high of the day, 413.72, to the top of this red candle that just formed, since we're in puts. So that's the next big candle. And that's also the candle near the moving average, the 8 period moving average. So I would move my stop loss down to the top of that next candle. And every time we get rejected from the 8 period moving average and get a power bar, that is where I would move my stop loss to. So what is a freak out? A freak out is when I don't allow the play to take me out. Instead of me taking profit when the play takes me out, I cut the play because I don't want to lose the gains. And that's not how you do it. All right, remember, Stock Market Daddy, I'm explaining it because explaining it helps me with retaining it. So as much as I'm explaining this to you and giving you insight into the strategy and the mindset, the psychology of a developing trader, I'm also taking notes. And when I watch this back, I hear what I'm saying and I take additional notes. And I might even see something in the video that I didn't see during the trade. So right here I'm watching it. I should have already adjusted my stop loss. And sometimes I wonder, like, if I get a tail bar like that, should I bring my stop loss back to the tail bar? Or should I only move my stop loss down to power bars? So that's something to consider. That's something to consider. But so far, so good. We're up 9%. 9%, very, very affordable option. Option doesn't expire till Friday, so I also had some time on it. Remember, I normally day trade, scalp, and I choose longer dated options. When I say longer dated, I mean instead of 0 DTE, I'm doing 3 DTE, maybe 2 DTE, maybe 5 DTE, just to slow down the theta. It's a little bit more expensive, but you got to pay for time when you're trading options. Remember that. When you're trading options, you have to pay for time. It's only going to go up or down, but will it go up before your time runs out? Will it go down before your time runs out? All right, so we're watching this candle form. Again, pay very close attention. We are respecting the 8-period moving average. The power bar, then we had a tail bar coming from the 8-period moving average. So as of this moment, the 8-period moving average is our primary resistance. Now, while I'm in this trade, I'm also focused on my stop loss, and I'm looking for the next opportunity for me to move my stop loss up. So I'm only up $5. So even moving it to the bottom of the tail bar, see, I just moved it down to the previous power bar, which I should have already done. And now I'm debating on whether or not I should bring it down to the top of this tail bar. The ultimate goal is to bring my stop loss down to break even, but I need to be up a significant amount before I do that, because I don't want to move my stop loss too early. This could be like a double dip, a triple dip. So we don't know what this is, but we also are keeping in mind that we may want to prepare to take profit soon, because we're getting extremely far away from the 21-period moving average, and that is normally a sign, a signal for a mean reversion. So let's go ahead and take profit at 24%. All right, quick 24% scalp. But again, I moved I took that 24% scalp, but did I leave money on the table? Very likely so, because I brought my stop loss down to the top of that power bar, and there's still more room to go. You live and you learn. Peace and love, and I hope you get rich. Subscribe to the channel, visit stockmarketdaddy.com, and I'll see you in the next video. Peace.